I do.
Okay, I've started recording.
Okay.
So basically, this is the demo. I just need to set it up, then so that we see what we can do. Yeah, template. Sorry, I forgot to set it up. God. Okay. So I'm just setting a black on white. Okay. Nice. Back up. It's white. Back down, bull. White. Yeah. Volumes red. Yeah. Bid. Blue. Ask red. Last price red. Oh, what's happening? Okay, let me see what's going on. Grid. Okay, back up. Back down. Okay, dark on white. Background. Okay. Black. Okay, let me see. Still setting up this template. White. Bull white. Okay, back up. It can be black. Just want to see the candles. I think it's set. Just to remove this indicator. Black and white. Well, now we on. Everything is set. Well set.
Yeah.
Yeah, we can see everything is well set. So I don't know, where do you want us to start? Still on the same
Anyway,
so that we can
let's stick on the same thing, I guess,
on the
because
same thing.
I tried to check it myself.
Yes.
And I still find I'm not good at getting those BOS, the church.
Okay.
Because whenever I'm doing it together, it looks like I'm getting it. But whenever I do it by myself, I find I'm still lacking some zones, how to get those ones in.
Okay, it confuses you actually wherever you're alone.
Yeah, whenever I'm alone, sometimes confuses me where is the church, where, I sometimes get some, but I find that whenever we are together, we get too many of them. You identify too many because you were used to identifying a lot of them.
Okay, I get what you're saying. So back to our pairs, the way we looked at the past 2 weeks. The first, is it last week? And this week?
Yeah, it was last week, yes.
So basically
this week we saw somehow this week, and our anticipation worked too.
Yes, according to actually what we went through, the anticipated move, it really played accordingly. Hello?
Yes, I can hear you.
Yes, so it played actually, it's what we're saying. It played actually the way we anticipated.
Yes.
Okay, let's first go through to a recap on what happened according to our anticipation. So Euro USD daily, remember a daily, we had a break of struck. Okay, let me first mark the daily chart. Okay, so you remember this, the daily
Yes,
chart?
I do.
Okay.
The daily chart, yes.
All right, I just want to be marking it. With black. Okay, and because the daily church, we started with a dealing range on daily, you remember? Then we saw a breakout. So this was our dealing range on daily. Yeah. So we saw a breakout from out of the dealing range. So let me do this so that we can recap everything. This was our dealing range on daily. The first week we looked at this pair and we saw a breakout of the market structure forming. It was the first breakout, which we call a what? A chart, right? So this was our BOS. Now I'm marking the daily BOS so that we can see now. The market created the daily BOS. Just want to mark it nice. Okay, this is now our daily BOS. You see our daily BOS? Yeah. So we just gonna go through what we did last week. So we scaled onto the lower time frame for our. It's not changing. Yeah, it's up. So you can still see what we marked on daily.
On a daily, yes.
And you can see our break of market structure.
On a daily, yes.
And for our, according to our anticipation, yes. You told me that there was the heads and shoulder. The first thing you told me, it was the head and shoulder, which you saw on 4 hour, of which I want to mark it. I want to do a recap so that you saw something like this last week. You saw this. Yeah. That left shoulder, and you saw the right shoulder, which was this.
Yes.
And you saw the head.
Yes.
Which is here.
Yeah.
Yeah. Exactly. It's something we talked about last week. And we just want to go through it again, analyze how really the market played. According to what you saw, it really played out. It was the head and shoulder. Yes, to me, like I told you that I would call it a Quasimodo setup, Quasimodo pattern, because it looks more like the head and shoulder. It's the same.
Yeah.
Yeah, I would say that. So we saw price before selling. We saw we were in a bullish trend because we had a break of structure, which was a church, as you see.
Yeah.
But again, since we're in a bullish trend, the characteristics to show you that we're in the bullish trend, we saw that the market kept on creating new higher highs, thus break of structures.
Yeah.
So it showed that the market was in the bullish trend before it started selling, right?
Yeah.
So I'm just marking the history. Yeah, when the market was, after breaking the structure, this is the church, it started making what we call couple of series of break of structures. So I just want to mark them the way we had marked the BOS. So this showed us the momentum, the bullish momentum was really high, because once you keep seeing couple of break of structure, definitely you know that the momentum is there for the trend to prevail. So when the trend actually came to, okay, what I'm looking at here, because for a bullish trend, we always have to be looking at at higher lows and higher highs, higher lows, higher highs, higher lows, higher highs, right?
Yes.
Then what happened here? The market price failed to continue.
Broke.
Yes.
It couldn't continue. It broke down towards downside.
Exactly. It broke the previous higher low, of which I want to mark now. So this previous higher low is what we had to call our church on a bearish side of the market. You remember?
Okay.
Church, change of character. It shows
Change of character.
Yes, it shows us some intent of a trend change.
Yes.
So this is breaking the previous higher low, the previous swing low. The market started to show some intent of a trend change. So it's what we're marking a chart, right?
Yes.
After that, it created a break of structure, of course. A church comes first, then what we continue to see what we call a break of structure is the next thing. You see, when a church is formed, it continues to form what we call the break of structure, which I'm naming, right?
Yeah.
So you know the principles of break and wherever the price break structure, you know the principle for entry.
It always has to return.
Exactly. So it's the same thing that we see here. We saw here. Let me get an arrow here so that we can. It broke structure. You can see the first structure, which is a church.
Yes.
So it made a return to the what? Where did it return?
To the order block.
Yeah, which broke the structure. So this was the order block. This is our pin bar. Yes, it was the order block which influenced that break of structure. So let me minimize it. Let me see if I can give it a nice color, a light one. So you saw it was a pin bar, that's the order block it returned to. Again, it continued to break. When it returned, people made short sales here, and it continued to create another break of structure. You see this one, eh?
Yeah.
So wherever you see break of structure, it always have to come to go back to make a return to the order block, right?
Yeah.
The issue we had here, we had our order block here, the main supply.
Yeah.
And we had, so what the market did here, it made the RTO right back to the order block of origin, to the main supply, as you saw.
Yeah. Yeah.
And people took some short sales here. We see it again, break of structure. Let's see. You always have to make break of structure so that you can get actually the idea of entry. So wherever you see a break of structure, you always have to look for the order block, which did what?
That's the order block that I guess I need to know more about that. Maybe I'm getting this idea of breaking a structure.
Okay, that break and retest, right? Wherever the market breaks structure like this,
I'm getting the idea of break. I'm getting the idea of breaking the structure. Those zones where they break the structure, I can tell now here it has broken the structure. Now the issue of like returning to the order block, that's the thing that I need to get more on.
Yeah, slowly. Returning to the order block is break and retest, retesting the previous key zone.
Yeah.
It broke, but returning to the order block, we actually considering candlesticks, which influenced the break of structure. So when we're talking about candles, exactly. So like that's here, you see what we saw here. I just want to get the arrow so that I can show you what I wanted to show you. Let me just make it solid enough. Do you see here the breakout structure here we had?
Yeah, yeah.
So where is the last candle which influenced that breakout structure? Is this one? Is the last what?
The
White candle. Is white or green candle? This is the one, right?
Yeah.
So this is our order block, which influenced the breakout structure, which actually we're talking about here. So we always have to, yes, we always have to
return back to it.
Yes. So
the procedure is returning back to that candle again.
Exactly. That's the same thing we saw here. You see?
Okay.
Let me first, this is our, that's the same thing we saw here. So price made a return with the arrow. So let me just put the arrow so that we can mark it nicely. We can trace it nicely. You can see the return. It did the return.
Yeah.
It did the return, right?
Yes.
And it created a flip. Also, we shall talk about the flip here.
Yeah.
Yeah, as time goes by, we're gonna talk about more.
Okay.
Yeah, so a flip again pushed price back to the main order block to fill the void. Yes, this order block. This was the main supply, of which now we had the major sell entries. So major sell entries were supposed to be here at the major order block. So we could see that this was what we call a confirmation entry. You always have to wait for returns. You make entries basing on the returns. When price breaks structures, you wait for the return. That's the retracement, right?
Yes.
Yes. So what people did, they waited for return to the main supply. So that was their confirmation entries.
Yeah.
Yes.
Yes.
So what they did, they went on the lower time frame, 15 or 5 or 1 minute. Yeah, you use the same concept still.
Okay.
You have to wait for the church, because wherever we're making entries, we always wait for the first break of structure, the church, to be formed, right?
Yeah.
So for instance, this was our confirmation entry. So sellers actually jumped in here. This is our main supply, the order block of origin. So we saw, according to what you saw, the head and shoulder, that pattern, price action pattern, it really played out.
Yeah.
And according to ICT institution traders, we take entries basing on the order blocks. Yes, the order blocks. The order blocks. Actually, those are typical candles within supply and demand areas. Yes. Now, since now we are in within the supply area, so if maybe you wanted to take a nice sell, like remember we looked at how we could use the Fibonacci. You still remember?
Yes.
So let's assume we add this swing. This was our swing, and this one was our swing.
Yeah.
Let me set it here. So I told you now, since we are we hoping to sell, what were we supposed to look at if we're selling? Because we have the Fibonacci here, we have the zones of Fibonacci, the equilibrium, which is 50, and below 50 we have the discount, and above 50 we have the premium. So which order blocks were you supposed to look at? The order blocks below 50 or above 50, in order for you to sell, to mark the right order blocks, the right candles.
I'll go with the order block below 50. Above 50, the one that is 60. Is it 60.8 something?
Yes, above 50, because those are the valid order blocks we're supposed to look for. We're supposed to wait for price to return to. So we add order blocks here this is the order block which you add above the first order block we add. Let me see if I can mark this out. You see this order block I'm marking.
Yeah.
This was the order block we had actually above 50, which was the right order block. But do you know why?
Okay.
Do you know why price had to first go violate that order block before it sells? You know, you always know the trick that there are always stop losses above entries where people are expected to enter, right? So there was what we call a liquidity sweep. Let me delete this one so that you can see. This is the order block, right? Which was the valid order block for entry according to our Fibonacci what? Placement. Yeah. So what we saw here, that price came and passed through that order block. It never respected that order block. It never respected that supply area. So it was what we called a liquidity grab, a liquidity sweep above that order block. So the reason why, you know the reason why there was that liquidity sweep? What was the reason?
Stop loss.
Exactly.
So stop losses for the tails.
Yes, because we had some liquidity resting above here, above the same order block. We had liquidity resting here. So it was necessary for them to first sweep liquidity away from that order block and also to fill the void. We add also what we call a liquidity void. As time goes by, we're gonna look at what we call liquidity void. So so here what we had what we call some liquidity, a lot of stop losses and a lot of pending orders. Yes. So they always first want to sweep to take out those stop losses before anything happened. And another thing, we add what we call a void, a liquidity void above that order block. So liquidity void, I just want to mark it. So we add a liquidity void. This was the liquidity void which needed to be filled. Yes. So that's why price came here, took out the liquidity from this above this order block so that it can as well fill the liquidity void before selling, right? Yes. So entries were made here, exactly here on this order block, the main order block. So this was invalidated. The first order block was invalidated. Price respected the main order block of the main supply. So this is the order block which was respected. Yes. So sellers entries were supposed to be set here as price made a return order block. So this retracement, this break and retest is what we call a return to order block. We talked about it, you remember?
Yes.
You see how price broke the structure here? It returned to the order block. It broke structure, it made the return to order block. Now we expected a sell. And according to the daily, we had our, let's go back to daily so that we can map it up nicely. We had our order block on daily, remember? Where we were expecting price to return to. Do you remember? This is the order block we have on daily. Yes, that's where now we're expecting a return so that we can be able to do what? What's the answer?
To buy.
Exactly.
To buy.
To buy. Yes. Because on daily, we had break of market structure and we had now to expect a return to the order block, which created the break of structure. Then we expected to set entries for buys, right? Going back on 4 hour, let me go back on 4 hour. I just want to mark the right order block on 4 hour. where we're expecting to buy from. So the right order block is the last bearish candle, the last red candle, which you see here, or the last black candle, for instance. So what we're expecting to buy from here. From that order block. So this is the setup now, because already daily showed us a break. It showed us a break of market structure. And it showed us a return, as you can see, to the order block. Now we have to prepare to do what? To buy.
That's true.
Yeah. So upon buying, we need to also wait for confirmation. So confirmation, you have to wait for the break of structure in the bullish side of, in the bullish what? Direction.
Trend.
Yeah,
Direction.
in the bullish trend, in the bullish direction. So break of structure, for instance, let me put something here. Let me draw something here. We're expecting something like this. The first break of structure, okay, it might form what we call, it might fail to continue, yeah, going down, and it might decide to do what? To make the first break of structure, which we would call a what? A church. You see what I'm marking here? If you see this church, we have to wait for the what? For the return, for a retest, before we take a what?
Bullish orders.
Yes. So we'll be expecting something like that. You could say something like a W. You always have to look for the W so that you can be able to indicate a church. After a church will confirm that the trend has an intent of changing. Wherever you see a church, there will be a break of structure.
Okay.
Yes. And wherever you see a break of structure, expect the price to do what? Before you make an entry, expect price to do what?
To return to the order block.
Exactly. Then you would make your entries here on your return.
Okay.
Yes. So that was a typical anticipation we had last week, and it really played out. I traded Euro myself, and USD Swiss, I did trade it, and really it paid us awesomely.
Okay.
Yes. So another pair we looked at, it was the opposite pair, right?
Yes, Swiss franc. Yeah.
Yes, it was the opposite pair. Yeah, USD Swiss franc. Yeah, but before we go to the US Swiss franc, because I need to renew more minutes, we're gonna talk about USD Swiss franc in the next session, when after renewing the minutes. So here we on 1 hour, we left 4 hours.
Okay.
Yeah, we on 1 hour. So I just want to make a recap on the entries, how sellers made entries. Yes. So this is our 4 hour order block where price tapped. After grabbing liquidity from this high, this swing high, there was liquidity, a lot of stop losses here. Yeah, you remember there was a lot of stop losses from these two highs, a lot of stop losses, a lot of pending orders. Yeah. So that's the reason you saw price going for the main order block, because it wanted to take out these highs first, these swings high. Yes, because there was a liquidity resting above here before it decides to sell. Yes. Wherever price keeps selling, you have to be able to mark break of structure. Key levels where the market actually breaks structures. It's always a must for you to mark so that you can track the possibility of price delivery after the market breaks structure. Because you always know that when price returns, it will always have to come back to the order block, which created the break of structure around there. So it's the reason why we really have to do what? to mark wherever we see a BOS, we really need to mark our break of structures. So, this is 1 hour. We just simply marking the BOS.
Yeah.
Key zones where a break of structure happened.
Yeah.
So that's what we're marking. And this was a church, and I'm marking the church first. This was a church.
Change of character.
Yes, it was this was a church.
On 1 hour.
On 1 hour. This was a church on 1 hour. Change of character. You know why? The reason I call it a church. You know why? Because we had that swing low, right?
Yeah.
So price took out that swing low. You remember?
Yeah.
It took it out. It took it out, you see, when it started to drop, forming what we call confirming the church.
Yeah.
And it continued down, it proceeded down, creating a couple of break of structures, as you see. We're naming them the way we've named them.
Yes.
Yes. So wherever you want to take some entries, most people actually consider what we call the church. They look at the church. The church is the first confirmation you have to look at, taking entries. Yes, the change of character. It's the first confirmation we always look at. Yes, so I think our minutes are finished. I think I'll be requesting for more minutes. For now, I think let me do this. Let me pause for this so that I can renew.